Yeah, you had 1,000%, but the cool thing is that you had $51,000 profit. You can see just the theme is the same. We had an $82,000 winner. What's going on? It's Ryan, your CEO and head quant and happy trader. Wanted to go over an Ethereum year-to-date backtest for 2024. We're going to get right into it. We're going to be looking at the 4-hour chart, so swing trading. There's not going to be many trades here. You can see that the signals are very few and far between. So the first thing we're going to do is look at the long and short backtest. So we're going to activate that. What we're going to do is set some parameters. Obviously, overnight margin is going to be too expensive, so this is going to be in the context of using KuCoin or one of those exchanges. We're just going to put in $5,000. We're not going to do any pyramiding. We're just going to do one single contract, hit OK, and then we're going to go ahead and just generate a report. And you can see here on the 4-hour chart, a very pleasing results. We had 6 total closed trades. You can see all the trades right here and how they did. And if you're wondering why are these numbers so big, one contract of Ethereum futures is going to control about 50 Ethereums. The numbers can get pretty wild. So again, if you're using a traditional CME-based broker, this is something that you should know. You're going to be required to hold a lot of margin, upwards of maybe 50,000, maybe even more. And then you can get margin called on small moves, where if you're using something else, and this is not financial advice, but if you're using one of the exchanges that will just liquidate your account, auto liquidation when you hit a certain amount, you can start with smaller amounts like this 5K, or you can even start with 1K or whatever you want to do. So going back, you can see the trades here. Our white trades here are going to be our winners, and then our red trades are going to be our losers. And you can see that even on our losing trades, we had plenty of opportunity of run up, so you don't always have to trade from signal to signal. This backtest is just to show you that you can, in fact, do that. So looking at the equity curve, it looks pretty good. On our, let's say, 5,000 without pyramiding, we did 918%. Now it's not bad. It crushes the stock market. It crushes all the hedge funds out there and all that good stuff. But the percentage gain, really, it's not the most important variable. There's a lot of other really important variables, and this is one of them. Let's look at a couple of them. So the first one is that we only had 6 trades for the whole year. So imagine making 6 trades for the whole year. Let's pretend you have commissions or really wide bid-ask spreads on some of these shady exchanges, on some of these securities, right? Quote unquote securities, and you have a 16% win rate, and someone's, hey, you have this great indicator, what is your win rate? And you say 16%, they're going to be like, oh, that's really bad. But when you look at the list of trades, you can see the losers are mitigated by the strategy and the way that the strategy is set up. So we're looking at these uptrend signals and the downtrend signals. And on this particular backtest, we are buying on the uptrend and then selling on the downtrend, but we're also closing our uptrend. So we're taking our signal here, riding that one up, and then we are closing that long, and then we're taking a short and then doing the opposite. So if we go over to the long only, we can do exactly the same thing. We just want to make sure that we set our account size to 5K. We're going to do the same exact setup, and we're going to go ahead and hit OK. We're going to make sure our deep back testing is enabled. We have the correct date, and we're going to generate our long only report and take a look at that one there. And let's see, that one has even less trades, 3 trades, right? So you can see the equity curve never went down, and that's pretty cool, right? So yeah, you had 1,000%, but the cool thing is that you had $51,000 profit. The other cool thing is when you're going long only, you're going to tend to win about 1 out of 3 trades depending on the security, but it's good to see us falling in line with normal happy trader conventions. And then if you go to the actual list of trades one more time, you can see that we have 2 losers, and then we had this just massive winner. But even on the loser, this one actually didn't have a run up, which is interesting. This one had a run up that almost equaled the loss, right? If you just go back to the chart, you can utilize common sense when Ethereum is just running from here to here. I like to personally sell into strength, but I'm not going to give you financial advice or tell you how to trade. So we are going to look at some other time frames. We have a little bit more time here. Let's go to the 1 hour, and we'll just assess that for Ethereum, and we'll do the same time frame and same exact setup, make sure everything's exactly the same. We're going to go back to the long and the short and see how the 1 hour chart did. And let's go to the overview. You can see this one's a little bit different. So we went down in time frame. You can see the percentage gain went up, but really the net profit is really the name of the game. When you have 17 closed trades, you can see percent profitable on the long and the short falling more into normal range because we have a bigger sample size of trades. We have our 35.29% profitable, and we did not go under at all. This would turn red if we went under. We're doing just fine using auto liquidation. We would have had a period of flatness here, but overall not too bad for 2024. And if we go over to the list of trades, you can see that there's just more trades to look at, and you can see the theme is very common. You do have some of these winners that are small, but the losers are generally going to be way smaller than the winners, disproportionately small. And then you can see even on some of these losers here, in this one here, you had the opportunity to take more profit on the run up than you did just taking that huge L. And again, this isn't the way you always have to trade. This is just showing you different scenarios. So let's go over from the long and the short to the long only. We're going to make sure again, as always, that we have exactly the same parameters in place. We have the same date ranges in place. We're going to generate that report for long only and let it populate. And we're going to go to the overview here. And you can see this one, we've been a little bit, maybe getting a little overheated on the long only. 44%, we're inching toward maybe 50% profitable almost. We had a 1,463% gain. What I really care about is the net profit compared to the amount of trades that you're trading, compared to the win rate and expectancy being green, right? So the expectancy, none of this means a ton if you're drawing down 50, 100 grand. But when you're floating up here and you're in positive equity, you're not in any margin call or auto liquidation scenario, this is really nice back test, right? So if we go to the list of trades, we can just see starting, they're all time stamped here. You can see that we have all of our trades here, and you can subscribe if you're into this type of thing. We do these back tests all the time, and they seem to be some of our most entertaining videos. But this one here, you can see just the theme is the same. We had an $82,000 winner, and then we did have a pretty big loser there. That's a pretty unusually big loser. You did have the chance to take 2,400 profit, but at the end of the day, if you were just trading automated from signal to signal, let's say, and you weren't trading based on just looking at signals and stuff like that, and then taking profits, if we go back to the chart, for instance, you take this downtrend signal, if it gets down to like here, and then maybe we get like a potential reversal, I might consider closing my position before we get that uptrend signal. But it all depends on how you trade, and this again is not financial advice. So that's what we're going to look at there, so you can see just a great little performance summary. And if you really want to get down into the nitty gritty, we can get down to the 45-minute chart, and we'll just look at the long only for this one, and we'll go to the overview. You can see 17 trades, 656%. We were sitting just a little bit of a drawdown, not bad at all. And then if we go to the long and the short, let's see how that one did, and let's make sure our parameters are set appropriately there, and which means that they were on the previous one. And you can see this one gets a little more volatile. So you can see as you close into these 45-minute charts, you can get a little more volatile. But at the end of the day, we still have over twice what the S&P 500 returns. And also you have the ability to hedge and again, subscribe, whatever you need to do if you want to learn about hedging, meaning if you put on a strategy, let's say you take an uptrend signal, but then it goes against you, what do? Hit the subscribe button, look for some hedging techniques, go through some of the videos, and I'm going to show you how to get delta neutral before your strategy starts to come to fruition, as many dips as that takes. Let's drill down just to like crazier time frames, like the 5-minute time frame. We'll make sure our parameters are the same, and then we'll go ahead and generate the long and the short report. This one should be a mess. Actually, not too bad. So we basically, what happened was we drew down almost to where we were in an auto liquidation scenario. So if your auto lick was set to 1,500, you may have needed to add some funds to the account, but you can see overall really nice here with the one contract. The thing is, you're going to get chewed up with commissions and bid-ask spreads if you're using auto lick, right? I don't like to use the long and the short, but I will check out the long only just for the sake of this video, just so you can see it real quick before I start rambling. You can see here we did draw down from that 5K to, let's call it, maybe like under 1,000. Then we had another little dip here, and then nothing but profits, 552%, $27,000 in profit. Not too bad, but we had to deal with 164 trades. So overall for Ethereum, really looking like the longer time frames are the way to go. You're just getting these nice consistent gains. It doesn't appear really that it matters too much about long and short. If you're more risk averse, meaning if you want to take both sides of the coin, and Ethereum is pretty volatile and so is crypto, you can always run the long and the short, and you can see that we performed very well there with absolutely no drawdown. So again, my name's Ryan, CEO and head quant here at Happy Trader. Have a great day. Hope you enjoyed these back tests. More to come on a lot of other securities. Hit the subscribe button and happy trading.